Have you ever looked at your bank account and wondered, where did all my money go? You didn't buy a luxury car. You didn't book an expensive vacation. You didn't suddenly develop a shopping addiction. Yet somehow, every month, your savings barely grow. It almost feels like someone is quietly taking a percentage of your income before you even get a chance to use it. And here's the strange part. This isn't income tax. It isn't inflation. It isn't your rent. It's something much harder to notice. It's an invisible wealth tax that millions of people willingly pay every single day without realizing it. The scary part is that nobody sends you a bill for it. Nobody warns you about it. Because it's invisible, it quietly steals thousands of dollars over your lifetime. Today, we're going to uncover what this hidden wealth tax really is, why your brain keeps paying it, and how escaping it could completely change your financial future. Let's begin by looking at what most people believe about money. Most people think becoming wealthy is mostly about earning more money. They tell themselves, if only I got a better job, or if only I got promoted. Some people dream about finally making six figures. It sounds completely logical. More income should automatically mean more wealth, but reality tells a very different story. Think about someone earning $3,000 a month. A few years later, they start earning $5,000. Then they begin making $8,000. Eventually, they might even earn $10,000 every month. On paper, they should be building serious wealth. But surprisingly, many people in exactly this situation still live paycheck to paycheck. How is that possible? Because every raise is quickly followed by new expenses. A nicer apartment suddenly feels necessary. A newer phone replaces the old one before it's worn out. More online subscriptions quietly pile up. More takeout, weekend shopping, and premium everything become the new normal. Without noticing, every extra dollar starts working for a better lifestyle instead of a better future. It's like trying to fill a bucket with water while tiny holes keep appearing in the bottom. You pour in more and more water, but the bucket never seems to fill up. Most people think these small leaks don't matter. But that's exactly how the invisible wealth tax works. Imagine walking into a coffee shop every morning. You spend $5. It doesn't feel expensive. $5 isn't a problem. Then lunch arrives and costs another $15. A convenience fee here and a delivery charge there quietly follow. A streaming subscription joins the list. Then come cloud storage, a fitness app, music, movies, and premium memberships. None of these purchases feel dangerous on their own. They're tiny, comfortable, and easy to justify. Your brain barely notices them. But together, they quietly become hundreds or sometimes even thousands of dollars every single year. Now here's where psychology enters the picture. Human beings don't naturally judge money by totals. Instead, we judge it one decision at a time. $5 doesn't feel like much. Neither does 10 or even 15. Our brains evaluate each purchase separately instead of adding them together. Imagine picking up a single grain of sand. It's almost weightless. Now imagine carrying millions of grains. That's called a beach. Small things become enormous when repeated often. Money works exactly the same way. That's the hidden power of the invisible wealth tax, and it's why tiny daily decisions often matter far more than big financial ones. Companies know this better than anyone. That's why so many businesses have shifted away from selling expensive products. Instead, they sell cheap monthly payments. $9, $12, or $20 feels harmless. Our brains compare the monthly price instead of the lifetime cost. Imagine paying $15 every month for something. It doesn't sound bad at all. But keep doing that for 10 years, and you've spent nearly $1,800. And that's only one subscription. Now multiply that by 6 or 7 different services. Suddenly, you've paid enough to invest, start a business, or build a meaningful emergency fund. Yet because it happened slowly, it never felt expensive. This is called payment invisibility. Pain disappears when spending becomes automatic. Think back to when people mostly use cash. Handing someone physical money felt uncomfortable. You literally watched your wallet become thinner. Today, you simply tap your phone, click once online, or use facial recognition. Money disappears without emotion. Convenience has removed the feeling of spending. When the pain of spending disappears, spending naturally increases. Scientists have found that people often spend more when using cards or digital payments than they do with cash. It's not because they're richer, it's because the purchase feels less real. The invisible wealth tax grows even faster because of this. Now let's talk about something even more powerful. It's called lifestyle normalization. Imagine buying your dream smartphone. The first week feels amazing. You're excited every time you unlock it. A month later, it's just your phone. The excitement quietly disappears. Soon, you're already looking at the next model. The same thing happens with cars, houses, shoes, restaurants, vacations, and almost everything else. Psychologists call this hedonic adaptation. Humans quickly get used to improvements. What once felt luxurious becomes normal. And once it feels normal, you begin searching for another upgrade. Without realizing it, you start paying an invisible tax simply to maintain a lifestyle that no longer makes you happier. The cycle quietly repeats itself. Here's a simple metaphor to understand this better. Imagine walking on a treadmill. You're moving constantly. You're working harder every year. You're earning more money. You're buying more things. You're upgrading more of your lifestyle. But financially, you're standing in exactly the same place. The treadmill isn't broken. It's doing exactly what it was designed to do. The invisible wealth tax works the same way. It keeps you busy without actually helping you move forward. Now, here's something most people never consider. The wealthiest people often don't win because they earn dramatically more. They win because they lose less. That small difference changes everything over time. Imagine two friends who earn exactly the same salary. One spends almost every extra dollar that comes in. The other quietly invests even small amounts every month. At first, there doesn't seem to be much difference between them. Nothing dramatic happens during the first year, or even the second. But after 10 years, the difference becomes astonishing. One person owns appreciating assets, while the other owns expensive memories and depreciating purchases. Neither person felt rich while making those decisions, but time magnified every small habit. This is why wealth isn't usually built through giant financial decisions. It's built through thousands of invisible ones. Every delivery fee matters. Every unnecessary upgrade matters. Every impulse purchase, forgotten subscription, and unnecessary convenience adds up. Each one looks insignificant on its own. Together, they quietly become the invisible wealth tax. Now, this doesn't mean you should never enjoy your money. That's not the lesson. Money should improve your life. It should create memories. It should reduce stress. It should give you freedom. The problem begins when spending becomes automatic instead of intentional. Ask yourself one simple question before buying something. Will this improve my life next month, or am I just buying a few minutes of excitement? That single question interrupts autopilot spending, and that's incredibly powerful. Another useful habit is called the 24-hour rule. Whenever you want to buy something you didn't plan for, wait one day. If you still genuinely want it tomorrow, then consider buying it. You'll be surprised how many purchases disappear overnight. Impulse is temporary. Regret often lasts much longer. Another powerful shift is to treat investing like a monthly bill. Most people invest whatever money is left over. The problem is that there's usually nothing left. Instead, pay your future first. The moment your income arrives, automatically move part of it toward investing or saving. Now your future gets paid before your spending habits do. This tiny change completely flips the invisible wealth tax. Instead of your money quietly disappearing into consumption, it quietly starts building wealth. Here's another way to think about it. Imagine every dollar as an employee. You hired that dollar to work for you. When you spend it on something temporary, that employee quits after one day. But when you invest it, that employee starts working every single day for the rest of your life. Eventually, those employees begin hiring even more employees through compound growth. That's how wealth quietly grows. Not through luck, not through perfect timing, but through consistently giving your money a job that lasts longer than today's excitement. The biggest secret about becoming wealthy isn't earning the highest salary. It's protecting your money from the invisible forces trying to take it away. Advertisers compete for your attention every second. Apps are designed to make spending effortless. Social media constantly tells you someone else has something better. Entire industries profit when you forget about tomorrow. That's why building wealth today isn't only a financial challenge, it's a psychological one. The people who become financially free aren't necessarily the smartest. They're often the ones who notice the invisible wealth tax before it quietly steals decades of opportunity. So the next time you wonder where your money went, don't only look at the big purchases. Look at the invisible ones. Look at the automatic ones. Look at the comfortable ones. Look at the ones that felt too small to matter, because those tiny daily decisions are writing your financial story one page at a time. The invisible wealth tax doesn't arrive once a year. It shows up every single day. And every day, you get to decide whether you're paying it or escaping it. That choice shapes your financial future more than you might realize. If this video changed the way you think about money, remember to subscribe to Rahatinvests, where we break down money psychology, investing, and wealth building into simple stories anyone can understand. Because financial freedom isn't built by knowing more. It's built by seeing what everyone else overlooks. Stay tuned to us for more latest videos.